Hey everybody, happy Friday. It's Kristen with the Williams team in Austin here, reporting on how things are moving along in the Austin real estate market. So this week I was fortunate enough to be invited to Homeowners Financials Group. They put on a economic forecast and seminar that I was able to attend. And I'm basically attending as much as I can in order to just really glean as much knowledge and information from as many sources as possible. But overall, it was a pretty positive economic forecast over looking at Austin and looking at Texas in general, which is what I've kind of been sharing with you guys already. Austin is still poised to be one of the strongest markets in terms of, yes, housing. Right now, housing is a little bit of a low spot right now because it's impacted by kind of what's going on nationally. But just in general, Austin is adding 42,000 jobs per year and is predicted to average $42,000 jobs. We still have 3% unemployment. We have a high household income. We have tech moving here, a lot of tech moving here. And so there's just a whole lot of very positives that basically say that Austin's going to continue to be an economic engine and one of the strongest markets in all of Texas. And therefore, housing usually is the first to kind of go down or the first to kind of go up, depending on where we're at. What's an interesting thing to kind of pay attention to is new construction and new construction starts. So the last time we went through a recession, the Great Recession, housing just completely stopped being built. A lot of builders were financially struggling and they stopped building. And so this time around, we're seeing kind of the same thing. And the reason we got into this such a low supply and such high demand was for Texas in general. People are moving to Texas. We've got a lot of states moving here. But the builders stopped building for a period of time. And we're starting to see the same thing. Builders are slowing their starts. They have fewer starts this coming new year that they had at the beginning of this year. So we're still going to probably be in an inventory supply shortage because builders are paying attention to the levers, and they don't have as much money coming in, so they're not able to build as much. So when the market rebounds, we might be in another similar situation, and it's probably about 2 to 3 years from now, and that's what they're predicting. Austin is typically a market that when housing is impacted, we're one of the last to fall and one of the first to rise from that, just because there are so many strong so many strong things that impact us here. So but the biggest thing that's really impacting us in the housing is interest rates. Interest rates they went up to 7%, and they went a little bit below 7%, and a little bit into the mid sixes, and now they're kind of rising closer to 7% again. And when interest rates continue to climb, which they're predicted to climb again, that always pauses buyer activity, buyer behavior changes based on interest rates. But I will say there's still a lot of opportunity out there because there's more inventory now than there have been in the past, and buyer demand is down. So they said that buyer demand is about the lowest it's been in the past decade, which makes sense because we just have lots of inventory, and we don't have great inventory that buyers are just not choosing to buy. So that that does say that interest rates do impact the payment, right? People buy based on their payment, not on their necessarily interest rate or the house price. It's all about their mortgage payment, which interest rate impacts that. So we are seeing the prices starting to level off. We saw fewer price reductions this weekend than this rolling 7 days than we'd have in the last 2 weeks prior. So I take that as a good sign that maybe our prices are starting to level off a little bit. So that's kind of where we're at. I don't necessarily see anything in the Austin area that is negative from an overall perspective. Unemployment, jobs, household income, people are employed. It's that sentiment's down. People think that it's not a great time to move and not a great time to buy. So that's impacting a lot of people's decisions and behavior. And then interest rates, obviously, that is a real thing that is impacting people. But overall, Austin is going to probably stay strong and remain strong in general. So we're in this kind of like low spot in the housing market and low spot in the economy, of course. That will probably continue on this way for a little while, which just means my strategy for helping people sell homes is we've got to be priced. We've got to be the prettiest house, and we've got to be priced really well. And then we have to aggressively market it at agents, which is why people hire us to do that. And we have to be great negotiators, which we are as well. So I feel really confident that our strategy for moving past this kind of harder spot, if you're a home seller, but it's a much easier time to be a buyer. Even though interest rates are higher, you're not competing and paying over asking price. There's always opportunity in the market. It's just, what's your perspective on it? So that is my opinion on where we are today, and based on some of the things that I learned this week and heard from studies that were reported by national reporting and data measuring companies. So anyhow, y'all have a wonderful weekend, and I will see you next Friday.